Before we take a look at what's going on in the broader markets ahead of this big Fed announcement this week, let me explain what you're looking at. So this is a layout that I created in this platform, and I created this matrix, if you will, giving what we can see is performance over the change week, month, quarter, year, and so on. Pretty common across many different platforms that you can set up. However, this gives me a pretty quick view as to what's happened from one week to the next and where these different sectors are. These are all the S&P sectors and how they're performing. So what I've set up here is this row and this row tells me if prices were where they are in relation to the 50 MA and the 20 MA the previous week, and then the current week would be this row and this row. So the previous weeks in XLK, they were below those moving averages. Now they're in above. Short-term plus. However, what I see is that the 20 is not above the 50 MA. The 20 MA is not pointing up above the 50 MA with the close above the 50 MA. So as I look through here and looking for what's done the best, what's done the worst, what's maybe depreciating, getting worse, what might be in the middle, this gives me a pretty quick overview as to what's going on there. So I can see energy is all green check marks. It's about 4% above the 50 MA, 2% above the 20 MA. And look at that. It appears that it's just getting started. It's been pretty erratic and choppy. It broke out. There was a slight rejection on Friday. Here's the weekly time frame going sideways. And it's got room to go up if it can maintain this advance that began. So definitely an improvement. What else is all green? Well, healthcare. And this is an ETF that our ETF letter has been in for a little while. Pulled back last week toward what we call minor support, the rising 20 MA. Ideally, it'll form a buy setup and continue to move higher. Now, I do see it's up near this resistance area. So this reaction is pretty normal. Profit taking after a move up. And if it goes sideways here, which is what we'd call bullish price action, or buyers step up here and push it higher, it'll make new all-time highs, and that's great. Financials, you can see two red dots there. It's still above the 200. It's been all over the place. It's a giant mess. Now, from here, looking at these different ETFs, what's done well on that day, on the week, on the month, and I can sort these columns, what's done the best on the month, and that has been technology. What's done the best on the year, that has been technology. But as you all know, we had this big correction in November, all the way down here to the low, and that was about, I don't know, most of these have pulled back 10, 15% or so, and then they rallied back up toward resistance areas. And this is something that we've seen pretty much everywhere, where we've got these big declines and then retracements. As you can see, here's semiconductors, regional banks. They were correcting for a while, and they came off of the lows. Other positive events last week, the transports broke out. They were doing nothing all year. You can see right there where we started the year, they finally broke out and cleared the highs, and now they're positive on the week, and that's got bullish implications for the economy. So I like the fact that the transports are finally participating. They broke out. The Dow has been doing okay this year compared to the transports, and Dow theory, transports move up with the Dow, and now we've got that confirmation, another plus. But the Dow's been consolidating like many things for several months now, even though they've moved up off of the low. Essentially, they're where they were back in October after a decline. And many of these, they're either flat, slightly down, slightly positive, since October. A lot of, yippies about the move off of the low, or a reprieve that they didn't collapse. Essentially, in a few months, they're really not doing much of anything. The Nasdaq, we'll see similarly the same thing. It's down. S&P 500, just a big trading range over the last few months. So it doesn't lend itself well for buy and hold. Short term, better, but the way it made this V bottom and retracement certainly wasn't an easy trade at all. Now, down here, we can look at different stocks within these different sectors. So as we look at maybe what's not doing so well, now consumer staples, it's coming off of this low here, and it's another one of our ETF plays that we bought because it was down near this major support level, and it's rising up into resistance. You can look at any of these and see how individual stocks are doing. And so there are scans within here, wide range bar scans, bearish scans, percentages from moving averages, the trends and weeklies and so on. So Dollar General, I look at that wide range bar. It broke out last week. That looks great. It was on an earnings report. Historically, they go higher when they report earnings and go up. And you can see this nice rounding bottom. Short-term extended now. Put it on an interest list, and I can just click this. I put it in the list. Done. Flagged it. Look for this to pull back. I'm not going to buy it here. It's got to pull back a little bit. Constellation Brands coming out of a bottom. Now, it's near resistance. Been down a whole bunch. It's been down for 2 years now. Is it near some support? Not quite, but it could be starting a bottoming process. You can see this is part of the process of looking for opportunities. We look at technology, which did the best last week, but it's at resistance. Is there something maybe that is a bullish 180 reversal within the sector? There's one, and there is a bottoming tail bar. Let's click it. Dell. Now, it's been moving up. It's been a grind up for 2 weeks. It's not quite at resistance yet. There is a wide range bar and a bottoming tail bar, so there were buyers on the dip. If it can clear this high, possibly could get up to a flat 50 MA. It's not a rising 50 MA. If you're a short-term trader, you're nimble. That could be something you'd want to take a look at. Now, what I would do or suggest you do is look at the 65-minute chart. All right. Now I can see it's got a bit of a bottoming action over the last few days. Resistance, not too far away, right up the end of that 50 MA. So you got to be nimble if you're a short-term trader. Now, you take that bias into next week, look at your 5-minute chart. Point is, it's not extended. Even though this is a wide range bar, you can see there's the move there, and it's got all of this consolidation going on inside that bar, and then Friday. So if this moves up, let's assume the market's moving up, it's firing on all cylinders. You've then got a short-term trade as a day trader. I don't know if you want to do it as a swing trade. Ideally, after the consolidation like that, we go back to the 65-minute chart. It's up here sometime on Monday, ahead of the Fed announcement. You take your money and move on. That would be good. And so you just go through and look at other things. This is not something I'd be interested in, even though it's got a wide range bar. It's in a downtrend, coming out of the downtrend. It's got a lot of work to do. Essentially, we're looking for clean patterns, meaning they're relatively tight, consolidating, and there aren't many of those right now because a lot of stocks and indices have made pretty substantial moves up in the short term. Let's see one of them, industrials. So this is typical of what we've seen. Big move down, big move. It's at resistance. It hasn't gone sideways long enough at resistance. It's just not attractive for doing anything, not a swing trade. It's not even attractive yet for a day trade. So there's a lot of patterns like this right now, which tells me do nothing for the time being. Just wait and see. I mean, there are these short-term trades. Let's see what the Fed's going to do. And it may be a blast-off scenario on that Fed announcement, and Powell's going to be talking on after the announcement, a half hour later, and if he is making comments as to more cuts are coming, which most believe that they are next year, the markets will probably be off to the races into the end of the year. Now, again, we can just look at the S&P 500 and look for things that are maybe touching the 20. I just click that, and now I've got stocks touching or in the area of the 20 MA, or they did touch it. And so there's Dell again. There's a nice one above that high. Stop below the low. Stop means share sizing. What's your willing to risk? You're willing to risk $300. You're entering here. Your stop's down here. Figure out how many shares it would be for you to lose $300. But calculated risk. The pattern suggests it's going to go up. Buy it above the high. And I said stop below the low. It should be able to continue to advance. That's what this implies. You can see the wide range bar on the weekly. That's this move here. This pullback. The breakdown, 100% retracement, topping tail being ignored, wide range bar, looks great. There you go. AVY. This is how we find opportunities. That one I'm not interested in. T-Row broke out, needs a pullback. One of those consolidation patterns. Let's find something else. Sort ADX, a trend indicator there that measures trend. What's strong? Now, it's strong trend, but the red check mark tells me it's in a downtrend. Now, I could find strong trends with a green check mark. There you go. Did it consolidate enough? Maybe, maybe not. It's at near all-time highs, so that looks good. I'd like to see a little bit more consolidation, but you can see these layouts that I've created really, really are helpful for you to zero in and find opportunities. These layouts I share with subscribers. As a subscriber to our advisory letter, our ETF letter, weekly options trader, or if you're in the green room with us or taking a course, I share these with you if you use this platform. I have no affiliation with the creator of this platform, but if you use it, it's a very, very popular platform. You become a member of Master Trader. You're welcome to these layouts, and I have others for scanning ETFs, for options, gaps. If you're a gap trader, I've got a great course right now on gaps. All of our courses are on special for the end of the year. And if you go to mastertrader.com/holiday, you can see all of that. And if you're an active trader and can be with us in the green room, even if you're there just in the mornings or just in the afternoons, which some are, great education, great trading opportunities, great education throughout the whole day, day in and day out. With the annual subscription, it's about $1.60 a day. If you can't be with us, and maybe as an advisory subscriber, where you get text alerts throughout the trading day with new trades, management of the trades. At the end of the week, I do an extensive video reviewing the broader markets, trades, option trades, directional trades, shorts, so on. So I think the annual there, it comes to like $1.30 or $1.40 a day, less than a cup of coffee, right? For continuing education and trades, fantastic service. Education is great. The courses, there's bundles of courses that are available right now. So check it out, mastertrader.com/holiday. And if you have questions, email me, Greg at Master Trader. We don't talk. I'll be doing T live this week, and I'll be doing another presentation on the 10th, which will be sending out a notice about that. Or just join us in the mornings. Go to YouTube and join us in the morning for pre-market reviews. And if you have questions, as I said, email me, Greg at Master Trader.